Hello, friends. So, in the month of October, we have seen heightened volatility in the market, which basically stemmed from the fact that we saw global yields going to decadal high. In fact, that moved because of the central bank's resolve to control inflation, even if it results in some amount of recession. With that move, actually, the risk matrix for the risk assets got disturbed, and we saw that volatility coming in. But we also saw the volatility getting moderated and the yields retracing because globally there is a divergence between the growth. Say, for example, US's economy is doing quite well, but the European economy is not doing that well. So, because of that divergence, the growth or the stability of the growth which central banks may be penciling in may be doubted by the market, and hence we are seeing some amount of retracement. If we talk of India in that growth perspective, we are seeing India doing quite well, and the all high frequency indicator are showing good growth. And that good growth and macro stability is translating into the domestic corporate results. And as we are towards the middle of the earnings calendar, we are seeing that most of the results declared are on the expected lines. Especially if we talk of Nifty 50, so far whatever has been declared are very much on the expected lines or better than what the market was expecting, and that is what is giving the buoyancy to the Indian markets. While there was a lot of volatility in the global yields, if you look at the Indian yields, was quite anchored around 730 levels. Um, Indian rupee also behaved quite well, partly because there was RBI currency management over there, but partly also because of the strength in the domestic economy. So these all are, basically, if you look at yields, if you look at currency, if you look at earnings, high frequency data, this all is suggesting that the Indian economy is quite well, and that should translate to earnings and ultimately in the prices. Uh, if you consider that, will we see our yields moderating from here? Uh, you know, it's not a simple answer because our yields are driven by also what is happening globally. But at the same time, if you look at 10-year at 730, I think it's a good level to look at from the medium term perspective from the risk reward, though the middle part of the curve still remains more attractive. So overall, we are looking at a stable markets going ahead. And as we culminate our earnings season in times to come, I think the street will get more confident about the earnings going forward, and that will further give stability to the markets. So with that, we'll end this month's outlook and wish you all a very happy Deepavali and a prosperous New Year. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.